The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks, and I started the show for TFNN. I posted the chart of the Treasury bonds on a 60-minute basis, and if you take a look, you'll see that we are attempting to hold a double bottom from back on the 22nd of August. It's a coin toss of whether it's going to hold that level or not, but it does show how badly these interest rate markets are looking. I mean, this is a very, very sinister chart. We've been saying how bearish these charts have been for a long time. They're getting more and more bearish. We're very oversold at this time, so we could get, a snapback rally of some kind. But frankly, these look so bearish that it's quite scary, because we're looking at something that we haven't seen in a very, very long time. In the markets, and that's higher interest rates, and that's telling us that we're looking at something that is going to be here for a while. So if you've got a chance to buy a house, lock up the mortgage now, because it's not going to be long before they show that we're going to be looking at much, much higher interest rates. I'm going to also put the chart of the Treasury notes on a daily basis, and I hope that it comes in. I'm not technically challenged, or I am technically challenged, but we have broken badly once again, and okay, I'm going to try to do this again. If you'll give me a second, I've got to I'll do it one more time and see if we can get it to work. I want to show the Treasury notes. That's a daily chart. And the reason why the notes are important, folks, is that that's the big market. That's the market that determines our interest rates on our automobiles, credit cards, and also mortgages and stuff like that. That's the really big market. That 30-year Treasury bond, that's the longer-term one. They use that for longer-term mortgages also. But the main one is the Treasury notes. It's about 6 times the volume of the 30-year bond. It doesn't have the good volatility that we have in the Treasury bonds, but that's what that's what we're looking at as far as a chart. You can see that it's just been just an absolute disaster. And it doesn't look like it's getting any better. We are very, very oversold by any stretch of the imagination. But anytime we get a rally here, we want to be able to to get in this. We're almost at the 786 retracement of the low from 2011. We're only about less than half a point from that. And that would complete the final head and shoulders pattern objective that we had when we were watching the head and shoulders pattern form between 2011 and 2012. That was a perfectly symmetrical one, and we had these little small rallies along the way. And it's just been a very, very bearish market, and it is still a bearish market. The question is are we going to get a little bit of a rally where we would get, a chance to get short again? Interest rates are going higher. I don't want to sound like a broken record. We've been saying this here for a long time, but they are going higher, and they're going substantially higher. We've completed, I believe, a 32-year bull market in lower interest rates, and I don't know how far they're going to go, but it's going to surprise some people, I believe. And that's going to be a factor in the markets, because when we have these prices like this, it just makes them a impromptu tax is what it really is. So that's what we're looking at now. We talked yesterday. We were talking about the gold market, and I wanted to, if you'll give me a second here to get the chart that we were looking at yesterday in the gold, because we're almost at this level that we talked about yesterday. It was a very nice pattern forming, and hopefully these will open up, and we'll see the 30-minute gold chart. We had the really nice Gartley pattern form on the day after Labor Day up at the 14.15 level, and since that time we have broken down and we're down below the 786 level right now. We've completed another ABCD pattern from the low that we made yesterday to the low that we made today, and so there is a possibility that we get a little bit of support here in the gold market. But as you can see, this is a major correction now because we're down, well over $70 an ounce in 6 days. And remember, we went up to $260 an ounce in gold. That was the third $260 per ounce rally that we've had since we topped back at $1,932 per ounce. We had 3 rallies that were $260 per ounce. I featured that in the newsletter this past week, and this is what we're looking at right now. So we are at some pretty major support here at the 1365 level. And what we're looking for is whether we get the bounce or not. We will get a good chance to buy the gold. This could be a very low-risk position in gold right here because, the low was $13.65. We're trading at $13.67. You don't have to risk more than about $8. And when you have a contract that's $136,750, that would make it, very, very low risk on a percentage basis because the rallies, when you get them, are usually $30. So if the risk-reward ratio would be particularly good on this one. Now, I would like to also I want to talk about silver for a little bit because we have the same situation going on in silver. If you'll give me a second, I will pull up the. I like to show the silver and the gold together because they trade in tandem with about 95% correlation, and silver has been a little bit more in fact it's been a lot more bullish as far as the pullbacks have been concerned, and we have matched the low in silver that we made several days ago, whereas in the gold we have already extended to the downside. So silver is starting to show signs that it's getting some play in it, and that people are actually looking at the silver market. But the best place to buy silver, folks, is not right here. We're only down 5 days from the high, and the bottom was way back in June. So we would expect at least a 1 or 2 week correction from this level, because that number we had in silver up at the $25 per ounce level was the first really big ABCD that we'd had in a long time. And so that's going to take a little bit of time to correct. I'm going to put this up here, and you'll be able to see that we were right at the 50% level on this chart. So we would expect the market to come down to around the $21 per ounce level, and that would give us what I think would be a low risk entry point. I still believe that we have a chance of this being a really big move in gold and silver, but this is going to be the moment of truth, because if we go below the lows we made, back in June, we're looking at a bear market that's probably going to parallel the one that we had in 1980. And in 1980, the market topped on January 20th, and it went down for only 23 years. It bottomed in 2003 at $260 per ounce. So that's a long ways from $865 per ounce, $865 per ounce down to $260 per ounce. And remember, we topped at $1,900 this time, and so we'll see. I still think this is a bull market because on the weekly charts, these were really big ABCD corrections that we had in gold and silver, and they're the first ones we've had in 4 years. And so that usually is what happened. But, when they have these big corrections, everybody gets extremely bearish at the bottom, and then they're not willing to buy it. So, the real simple place to buy it that we pointed out several times was when we had the first Gartley retracement at $212 per ounce in the gold. It was about 4 days after the bottom was made, and from that level it never looked back, and it just was basically a very orderly market with small corrections on the way up, and that's what we were watching when we were looking at the gold market. So I still think we've got a pretty good chance in the gold and silver, but we have to we have to be, we have to be a little bit careful here because, this thing could collapse, and I don't think it's going to, but it could, and that's the bottom line, is that you have to be able to, to protect yourself, when you're doing these things. Now, I wanted to bring up the copper market here because we had some real interesting things happening in the copper market. Let me draw these patterns in because they're so pretty that you really want to be able to see how nice they look when you draw them in, because it's such a beautiful pictures of ABCDs going to the exact 61% retracements and beautiful butterfly patterns forming in the copper. And I'll get that in there now, and you'll see that we did have a really nice rally in copper up around the $3.39 per pound level. We broke all the way down to $3.22, almost $5,000. We rallied up to a perfect 61% retracement 2 days ago at the $3.32 per pound level, and then we broke another $3,700 down to the $3.22 level one more time, and we should get a little bit of a bounce here because it's more of a double bottom pattern that's occurring now at this particular point. We have a question from someone about the backwardization of gold and what it means. I don't think it means very much. I look at that, and I'm sure the fundamentalists will figure it out. But when the faraway contracts begin, charging a lot more, it just means that the storage factor for the insurance and stuff is a lot greater. In real bull markets, the nearby contracts will sell at a high premium. And I don't really follow that. I mean, I just look at the price of the thing that I'm trading. It's a sum total of all the buyers and sellers. That's all I really need to know. That's the only thing I do know. I don't look at volume unless it's record volume. I don't look at oscillators. I don't look at moving averages. I just look at the price action. When I see prices going up, I know someone is buying. I don't care who it is. And when prices are coming down, I know someone is selling, and I don't care who it is. All I want to do is look at a pattern and tell me, yes, if I buy here, I know the probability is 65% that I'm going to win, and my win is going to be better than 1.5 of my loss. That's all I'm looking for. That's the edge that I have. I look at Gartley's, butterflies, ABCDs, reverse point waves, the 135 patterns. I look at all those, and when I see them line up, that's what I'm looking to do. And so these are the things that we're watching. We focused on the euro about 7 or 8 days ago when it was making that 135 reverse point wave up at the 134 level, and we've broken well over $3,500 in 7 trading days. So we got to take a little break. If you have any questions, 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and I had a question. I know it's a commodity because it's a stock index, but the question about the NASDAQ and the fact that it is so much more bullish than the and also the Russell too. But the NASDAQ, if you'll notice, over the last 7 or 8 days, we've come up and we've made this really large ABCD pattern that completed up here near the high of the day. It's a little lower top than we made back on the 26th, but we're still in the the fighting zone of making a new high in the NASDAQ very easily. This is going to be very interesting, but it has been much stronger, and the reason why it's been stronger was on the pullback, that took several weeks, going back from the August 2nd high, August 6th high. The market came down into the 27th. 3 weeks, and it just didn't even make a 382 retracement. That's very, very bullish, and that's why it's been so strong. Now, if you go to the second thing, and we'll take a look at the E-mini, the stop and P, and we'll take a look at that, and we'll see that we are making a much different type of correction here, because we have just barely made, the ABCD that we talked about yesterday, where we are completing the ABCD pattern up here at the 1658 level. That was the one we focused on yesterday. And if you went and measured it from the high we made back on August the 6th, you'll notice that came down, and it was exactly at the 382 retracement of that high. So it is far weaker than the NASDAQ and then also the Russell. Now these indices, you're only talking about several hundred stocks when you're talking about the NASDAQ. It's usually the NASDAQ 100, the big 100 stocks of the NASDAQ. But when you're dealing with the New York Stock Exchange Index, you're looking at just under 7,000 stocks of the most actively traded heavily capitalized, and they're cap weighted so that each one of them count as the value that they have. Now, NASDAQ is cap weighted too, but it's a smaller sample size, just like the Russell. These are smaller caps, so that's why I use the New York Stock Exchange Index. It's silly to use the Dow Jones Industrial because you're only talking about 30 stocks, and they're price weighted. They're not cap weighted. The price of IBM carries a much greater weight than a stock of I can't even think of the cheaper ones in there. There's probably some. Microsoft, so those are different values. So that's very, very important, to understand that. On the big picture, I'm still bearish. I'm just waiting to see, what this rally is going to bring. Right now, we're in the fourth day of it, and usually with these lunar cycles, the most you get is about 5 days, and we've got coming into Friday. And it's probably going to be an up week, given the fact that we had that big move up. And so the big key to be watching will be, coming in early. This is the first day of the Jewish holiday. This is Rosh Hashanah. It'll be followed by Yom Kippur in 8 days, which is the high holy days. And the market will be very, 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 very slow on that day in New York, because it's respected by everybody on Wall Street and most people, around the country for sure. I know we've got a lot of problems with wars or potential wars and stuff like that, but frankly, we are, we'll get through this. I don't think they're going to do anything, with the, oh dear, what am I trying to say? With this Syrian thing, because it's too late. I mean, they already told them, what are they going to do? What am I talking about? I'll just be quiet, because I know as much about politics as I do about crossover moving averages. You could write both of those, on the head of a pin, and I wouldn't be able to differentiate which was which. So that's what we're trying to look at. We want to go to the grain markets now. We've got some grains that have had some tremendous moves here, and we have just completed a very important price level in corn that we've been waiting for quite some time. This is going to be a 60-minute chart of December corn, and as you know, I left in early August, and we were looking for the ABCD move to complete in the December corn, and our good friend in the den, Mr. Z, he was looking for that up around that $5 per bushel level, and we certainly got that. And the market has now dropped well over $2,500. And what we're doing now is we're setting right at the 786 retracement from the low in last August. So this is a very low risk buy here in December corn on a technical basis. We're going to take a little break here, and we'll get back. Ask some more questions. 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. And if you have any questions, it's 877-927-6648. And I'll be happy to answer any questions if I can. I dropped the headphones. This is my second day back, so you'll have to bear with me. I posted a chart for March wheat using a 60-minute chart because it goes back just about 3 weeks, and you'll be able to see all the big patterns that are there, the big ABCD patterns. And today we made our low in the wheat exactly at the 786 retracement in the wheat. So this is we're at they're circling the wagons in the grains. Both corn and wheat have been in pretty strong corrections. With this wheat pattern, it's an ideal situation because you have a big ABCD pattern occurring at the same time that the 786 level is hit. So we have one happening in corn at the 786, and we're having one happening in wheat at the 786. So both of those make for a very good important thing. We've got a call from Michael in Toronto, Canada. Are you there, Michael?
Yes, I am.
What can I do for you, my friend?
Yes, I want to talk about West Texas Intermediate crude oil.
Okay.
I've been following all the pundits on all the major cable channels, and everyone appears to be super bullish and looking for at least $125 a barrel. As a contrarian, I'm looking the other way, and I'm just trying to figure out mathematically what would the price drop be if you have the following criteria. Okay, you have a CME announcing the doubling of the margins on the futures contract. You have the CME announcing a limit on the number of futures contracts a trader can hold, and you have an SPR release.
Well, I don't know any of those things except for about the margins I'm concerned with, because I've seen them already raise margin in crude. You know, they've just about doubled that to 10,000 just a few weeks ago when the market was running up. They did the same thing with gold and the same thing with silver, and that, of course, you know, that stopped it for a little bit. But, you know, the people are still going to trade it. With crude oil, though, most of the crude oil that's traded is traded off exchanges. I mean, there's a lot of crude oil traded, of course, in New York and London, but a lot of it is traded off exchanges. I don't know if you know this or not, but there are 6 firms that do about 70% of all the crude oil trading in the world. The 3 of them are in Singapore. There's one in London. There's one in Copenhagen, and there's one in New York. And they do most of the trading. So I don't know, you know, what the big effect will be. I just know that the swings are very, very strong right now. I will tell you a story, Michael. Back in 1991, when we had the Desert Storm War, you know, everybody was, you know, looking to be, you know, really bullish oil. One of my very good friends, one of my students, was running the Goodyear Tire and Rubber hedging operation. They had the Alaskan pipeline, and they hedged all the oil coming out of Alaska. And this was at the beginning stages of this, you know. And so what happened was they did all kinds of put and call strategies because the premiums were so high with oil at $42 a barrel. They were making a fortune. Well, as the Desert Storm drew close, he got a memo from the chief executive officer of the company saying to suspend all short trading operations in crude oil. Do not be on the short side of crude oil. And, of course, they made a great deal of their money by selling, you know, calls, you know, way out of the money that were very, very expensive. It was just, you're killing him. And so he called me up and he said, what should I do? And I said, the first thing you got to do is protect your backside. Send a letter, you know, registered, a telegram, whatever you have to do, and tell him why this is the wrong thing to do, because this is how we make our money. We love markets like this. This is what we hope for. We only see these once every 10 years, and we have to, you know, capitalize on it. Please don't tie our hands. The guy sent the letter back and says, we understand all of the risks, and we are going to stick with the program, no short selling. So he was stuck. Crude oil topped the day of the war, $42 per barrel. It dropped $11 a barrel the first day. There were no bids. I was on the phone with people in New York and also in Singapore, and there were no bids. It was dropping $2, $3, $4 a barrel. The first trade came in at around $31 a barrel, and from $31 a barrel, it went all the way down to $11 a barrel 8 years later, when it finally bottomed at $19.99. Now, guess what happened at Goodyear Tire and Rubber when the shingles hit the fan? Well,
he lost his job.
Well, they tried to fire him, and so he got an attorney, and he said, "Look, I tried to protect you. This is what happened." And of course, nobody knew that he had gotten this letter. And of course, it was a CEO. Of course, he doesn't get fired; he just gets a little less of a bonus. But John did keep his job, but it was a very it wasn't as fun as much because they put a lot of extra pressure on him because he embarrassed the guy. But you know, I agree with you. I think the news is out. I think it doesn't make any difference what they do over there. You know, we're getting ready to break. All we have to go is below 104, and it's over.
Okay. And what about the Keystone Pipeline? Is the price already factored in?
No, I don't know what that is. I'm the last person with fundamentals, my friend. So,
well, they're projecting that the first quarter of 2014, the pipeline will be completed. Well, at least the bottom half will be completed, right? And they can move oil from Cushing to the coast.
Michael, at my age, I'm trying to make Christmas 2013. I'm not worried about 2014, so I can't help you with the fundamentals, my friend. I don't do those. I look at the charts. They give me a pretty good idea. You know, we made that beautiful butterfly pattern up there at the 112 per barrel level. We broke, you know, well over $8 a barrel. We've rallied back 61% of that. It's still bearish, in my opinion, and if we go below 104, they're going to turn the lights out. It's going to come all the way down to probably the $90 per barrel level, or maybe even a lot lower.
Overnight, I mean, you can see a $10 drop.
Well, we saw it before. Why couldn't we see it again? You know, that's not unusual. People don't remember it, but I remember it.
Yeah.
I mean, it was like yesterday to me.
The daily limit is $20, correct?
Didn't even know that. I wasn't aware that there was a $20 limit in crude oil. I really that's a big surprise to me. I imagine there is. It would be a big surprise for sure, but I don't know what they would do if they'd stop trading there. They're going to trade it off the exchange anyway, so I don't know why they even have limits. But if there is a $20 limit, then that's good to know. But I wasn't aware there was a $20 limit.
Okay. All right. Thank you very much.
That's such an outlier event that it might not happen. But if it did, we'll certainly know about it. They'll tell us through some of the financial places like Bloomberg and TFNN. They great guys in this trading room here that really have handled on Brent North Sea and West Texas Sweet, and they'll tell us if we do get that. But I don't look for $20. $3-4 is a huge move for me, and what I'm watching now is I'm watching this rally back. If we could get it above the 110 level per barrel, then that's going to tell me, but maybe this still has some more to go to the upside. But if we go below 104 per barrel in October crude, then you're looking at some real serious moves to the downside.
Thank you very much.
Thank you. And my wife is from Toronto, so if we come up, we'll stop and have dinner with you. Okay, folks, we're going to have any more questions. It's 877-927-6648. And we just finished crude oil, which was one of the things that we had on our watch list. And so what we'll be doing now is we'll be switching and going over to the soybean market because we've had a really big move in soybeans. We had a tremendous Gartley pattern formed down at the $11.60 per bushel level, and the market rallied $15,000 in a matter of 3 weeks. But the reason why I want to keep an eye on this one is because we've made a triple top up here at the $14.10 per bushel level in the crude oil, in the soybeans, and it's very symmetrical from the high we made last August, September, around the same time period, and then in last September of 2012 we made our high, and it looks like we're making the same type of high now in the soybeans that we're looking at right now. So these are the things that we're keeping an eye on, and whether that's going to be factor into all this or not, I'm not really sure, but we'll just have to do one thing at a time. But this is a possibility of a major double top here in the November soybeans because of the triple top that's in there. If you get a chance to go into Tiger TV, you can see the high we made in August of 2011 came in September. The one in 2012 came in September, and the one that we just had came in September. These are the seasonals that you try to look at. I know the folks in the Tiger TV room, point these out, and that's those are things that I think are very, very important to watch when you're looking at these particular moves, because when they happen, they go for a very, very long period of time. Now, I did want to talk about one market that a lot of folks have had a lot of interest in over the past few months and stuff, and that is the sugar market. And it hasn't done very much recently, but I wanted to bring it up and to show you that it is trying to make some type of a bottom here, and it is right now setting at a 786 retracement, and we made a nice little head and shoulders pattern in the I'll blow it up here so we can see it better. You'll see this really nice head and shoulders pattern form here in the sugar market down here at the 1640 level. Very low risk here. You could probably risk about $500 in sugar. You have a very symmetrical very symmetrical chart pattern with the cycles that are there. I'll draw in the patterns that we watch so that you can see a good picture of that too. That I'll blow it up so you can see it even better, and you'll see that we have a very low risk possibility of buying sugar at this particular point. So that's what we're looking at. Now, I get to do something that I want to do, and since there's nobody calling in, that's what I'm going to do. We're going to take a look at a trade. A couple of weeks ago, we were talking about, this was before I went on vacation, we were talking about the euro making that reverse point wave that it made, and now I want to show you another market that is doing pretty much the same thing, and it is something that's traded worldwide. It's one of the bigger currency markets, and it is the Japanese yen, the land of the midnight sun, or the setting sun. And we will put up the daily chart, and this might not work, but boy oh boy, this is what you wait for. We have, and I will put this up here, hopefully this will post into the room and we'll be able to see it here without too much trouble. This goes back over the last 5 or 6 months. We topped, way back in May. That's when the Nikkei topped. The Nikkei has about a 90% correlation with the dollar yen. In other words, when the yen goes up, the Nikkei goes up, and when the yen goes down, the Nikkei goes down. So those are the things that we're watching. But what we have going right now is we have a beautiful symmetrical ABCD Gartley pattern that started back on right near on the new moon of August the 5th. The market went up for about 10 days, and we're now into that 10th day of that rally. And we should top somewhere in the near area of about par 13, which we've hit already, to possibly par 60, which would be the 786. Now, what's interesting about this potential trade is that it has the 135 pattern. In other words, your original high, back in May was number 1, and then if you come down into July, your lower high, that was number 3, and if you come into the high that you're looking at right now, that is number 5. The 135 pattern was made popular, by Roy Longstreet. And it's one of the better patterns because you're trading in the direction of the trend. You've got lower tops, and you're at a level where you can quantify your risk because the ratios are lining up, ideally with what you'd like to see. And so these are the things that you want to keep in mind if you want to do this trade. So the risk on this trade would be about $600, but your profit objective would be well over $1,500 to $2,000. If in fact, the trade does work. So these are the things that we're keeping in mind of, what we're looking at. I want to mention a little bit here about stop protection because if you do not use a stop in the market, folks, what you're doing is you're telling the market that I know more than you do. I know where you're going. I have no fear of you. And if you start doing that, keep your day job or start learning to flip burgers over at Mickey D's because it's not going to be long before they take you to the cleaners. The stop is for a protection. Put it in, even if it's a disaster stop. If you take a big loss, it's no big deal. You can get that back, but you can't take a disastrous loss. A disastrous loss is like 7 or 8 times what you're expecting. You put a $500 stop, you pull it because the market's not acting right, you just don't want to get stopped out at the high tick. Bada bing, bada boom, later it's $4,000 higher, and you're hurting, and you've destroyed your soul. If you remember the Japanese yen back when it was 75, when Tom O'Brien was really bullish the Japanese yen, and it was staying there, and it went from 75 to 95 without taking prisoners. I'm going to take a break here. We'll be back.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. And I have posted into Tiger TV the DBC, which is the ETF for commodities. And it goes back over a 3-year period. And I wanted to just let you folks see the relationship between the New York Stock Exchange Index and the commodity index. Now, if you'll notice on this commodity index, it has been going down since March of 2011. It's been in a distinct downtrend because we've had lower tops all along during 2011, 2012, 2013, and we just recently completed a ABCD Gartley at the 26.5 level. We're selling off a little bit from that level right now. But what this means to me, and it's a question that I have because I look at copper, very, very closely, and the fact that it usually has a very high correlation, with the stock market, and that correlation went kaput about 18 months ago. Stocks kept going up, and copper kept going down, and copper's continued to go down, as we've shown earlier in the show. But this is telling us that we have a tremendous divergence here like we've never seen before, and commodities should be going up. If you'll look what happened during 2011, commodities were going up with the stock market. When the stock market came down, the commodities came down, and the stock market rallied. commodities rallied, and then the commodities came down and the stocks came down, bada bing, bada boom. But recently, since 2013, that has all changed. Commodities have been going down and stocks have continued to go up. So that's a tremendous divergence that we've not seen in a long time. This is the commodity hour. And so this is a compilation of many of the commodities that we look at, put into an index. I don't particularly care for ETFs, but this is a good way, to see what the overall commodities have done. We follow the grain markets, the metal markets. Occasionally we'll look at sugar. Once in a while, cocoa. Never orange juice. And so that's those are the ones that we're really watching. So this is telling us that there's still something not right. There is a crooked stick in Denmark, as they might say. So we'll be looking at that later on. But we did complete these Gartleys. The lower tops here have been going on for 3 years in the commodity markets. And as you know now, we've got a potential double top in the soybean market, and we have a potential bottoms in wheat and corn, but they have to hold because they're at the 786 level, and any failure below that will take them down usually to the 1.27 expansion of that particular move. So we will be watching that very, very closely. We're very, very close to completing our book on financial astrology. We'll hopefully have it out by the first of the year. It looks really good. I've shown it to a few people, and they seem to like it. A lot of it is focused on the lunar cycles because these are the ones that are short-term oriented, and we found some things that to add to the fact that it gives you a little bit better probability, especially when we're talking about these super full moons, where we have the market or where the moon is on the equator, or it's at apogee, as far away from the moon, or perigee is close to the moon, because this adds extra gravitational, factors to this. And the thing is, it's got a band of a couple of days, one day on either side, and then there are times when it just doesn't work. It's got about a 75%, probability of working, and that's really good with the market because you don't get 75% very often. So we'll see, what's going to happen. When we do the rest of this search, but we're looking at some other things. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.